Good morning and welcome to TOITOI Japan Market Radio. This is November 20th, 2025. I'm coming to you from Tokyo with our daily briefing for global investors tracking Japanese markets. We're here to break down what's moving equities, currency, and rates across Japan today. Joining me as always is our portfolio manager focused on Japan macro. Let's start with the headline numbers from today's session. What are you seeing across the Japanese market landscape?
Thanks for having me. We're looking at a very strong risk-on session across Japanese equities today. The Nikkei 225 closed up 3.13% at 50227.5, while the TOPIX gained 2.203% to close at 3,480. Broader risk appetite is evident with the Mothers Index up 1.759% and J-Rights adding nearly 0.9%. On the currency side, dollar-yen pushed up 1.199% to 157.413, reflecting that risk on sentiment pressuring the yen. Gold in yen terms rose 1.32%, while crude oil pulled back just over 2% to 59.47. Overall, it's a clear picture of global risk appetite flowing into Japanese assets today.
That's a substantial move for the Nikkei in a single session. And I think we all know what's driving this rally. Overnight we got earnings results from Nvidia, and the reaction across Asian markets has been overwhelmingly positive. Headlines are calling this a 4% rally in some early trading sessions for the Nikkei. Walk us through what actually happened with Nvidia and why Japanese investors are reacting so strongly.
Absolutely, Nvidia reported earnings that came in well ahead of consensus expectations. The semiconductor giant continues to demonstrate robust demand for AI chips and advanced computing infrastructure, which is exactly what global investors wanted to see. This triggered broad risk on sentiment across equity markets globally, and Japan is participating fully in that rally. Now, why does this matter so much for Japan specifically? Japan's economy and its equity market have significant exposure to semiconductor demand and the global tech supply chain. Companies like Tokyo Electron, Advantest, Shin-Etsu Chemical, and Sony are all critical suppliers in the semiconductor ecosystem. When Nvidia posts strong numbers, it signals that the entire AI and chip manufacturing cycle is healthy, which directly benefits these Japanese component makers and equipment manufacturers.
So this is really about Japan's positioning in the global semiconductor supply chain. We're not just talking about one company's earnings, we're talking about a broader validation of demand for an entire sector where Japan has meaningful exposure. What does that mean practically for Japanese equities going forward?
Exactly right. From an equity perspective, today's rally is constructive for both the Nikkei and the TOPIX. The fact that the Nikkei reclaimed the psychologically important 50,000 level is significant. That level has served as a technical benchmark for market sentiment, and moving back above it suggests sustained foreign investor appetite for Japanese equities. The tech-heavy components of the index are clearly leading the gains, but we're also seeing breadth across the broader market. If this AI and semiconductor cycle continues to show strength, it supports the case for further appreciation in Japanese equities, particularly if it encourages more risk appetite globally and reduces safe haven flows. The key will be whether we can hold above 50,000 or if we see profit-taking and consolidation around this level.
And staying with that theme, the yen has clearly weakened on this risk-on move. We're seeing dollar-yen above 157 today. How should global investors think about the currency impact here, especially those with exposure to Japanese exporters?
The yen's weakness today is very much consistent with the risk-on environment. When global equities rally and investors rotate into growth assets, the yen typically comes under pressure as a funding currency. A weaker yen is actually supportive for Japanese exporters because it improves their earnings competitiveness overseas. For a portfolio perspective, if you're holding Japanese equities, a weaker yen can be a tailwind for corporate profit margins, especially for multinational companies with significant dollar revenue exposure. That said, the magnitude and sustainability of yen weakness will depend heavily on broader monetary policy dynamics, particularly what the Federal Reserve and the Bank of Japan signal in the weeks ahead. For now, the move above 157 reflects immediate risk sentiment, but we'll want to watch for any intervention rhetoric from Japanese authorities if the yen continues weakening sharply.
Good point on the intervention risk. On the rate side, how are Japanese government bonds reacting to this equity strength? Are we seeing any meaningful move in JGB yields today?
JGB yields are facing modest upward pressure today, which is consistent with the equity rally. When Japanese equities rise strongly, you typically see reduced demand for safe haven bonds, which pushes yields slightly higher. The 10-year JGB yield is edging up, though the move is relatively contained. The broader question for rates is whether this equity strength translates into sustained inflation expectations or changes the Bank of Japan's policy outlook. Right now, the BOJ remains committed to its accommodative stance, and structural factors like demographics and domestic demand continue to anchor yields at relatively low levels. But if we see a sustained rally in equities and a pickup in inflation data, that could start to shift rate expectations over the medium term. For now, I'd characterize the move in yields as technical rather than a fundamental repricing of BOJ policy.
That's helpful context. So the BOJ's policy stance remains the dominant factor for yields, even as equities rally. Shifting back to equities for a moment, you mentioned earlier that Japanese tech stocks are benefiting from this Nvidia-driven rally. Can you walk through which specific sectors or companies within Japan are most exposed to this semiconductor and AI theme?
Sure, there are several key names and sectors to watch. Tokyo Electron is one of the largest semiconductor equipment manufacturers globally, and their fortunes are directly tied to chip production demand. Advantest produces testing equipment for semiconductors, so they're another direct beneficiary of a strong chip cycle. Shin-Etsu Chemical is a major supplier of silicon wafers, which are foundational materials for chip manufacturing. Sony has exposure through its imaging sensors and semiconductor components used in a wide range of devices. Beyond these individual names, you also have broader exposure in electronic components, precision machinery, and materials companies that feed into the global tech supply chain. When Nvidia and other US tech giants report strong earnings, it validates the demand outlook for all of these Japanese suppliers. That's why the rally today is broad-based across the tech sector and not just isolated to one or two stocks.
So it's really about that entire ecosystem rather than just one segment. And this brings us to the broader question for global investors: is this Nvidia rally a one-day event, or does it signal something more durable for Japanese equities?
That's the right question to be asking. In the near term, today's rally reflects immediate positive momentum and a recovery of risk appetite. The recapture of 50,000 on the Nikkei is constructive and suggests that foreign investors are willing to put capital to work in Japanese equities. Looking further out, the sustainability of this move depends on whether the U.S. earnings season remains healthy and whether the AI infrastructure spending cycle continues. If we see continued strength in semiconductor demand and capital expenditure from global tech companies, that supports the case for Japanese equities to move higher. On the other hand, if we get disappointing guidance from other tech names or if macro conditions deteriorate, we could see some of today's gains given back. The other factor to watch is valuation. Japanese equities are not particularly cheap on a historical basis, so further upside will require continued earnings growth and confirmation that the economic recovery in Japan is broadening beyond just the export sector.
That's a balanced view. So for global investors, the key is to watch whether this strength in semiconductors and AI translates into sustained corporate earnings growth and broader economic momentum in Japan. Let me ask you about the currency piece again, because I think it's critical for international investors. If the yen continues to weaken, does that change the attractiveness of Japanese equities for dollar-based investors?
It's definitely an important consideration for currency hedged versus unhedged exposures. If you're a dollar-based investor holding Japanese equities unhedged, a weaker yen can be a headwind to your returns even if the Nikkei is rising in local currency terms. That said, many global investors view yen weakness as part of the investment case for Japanese equities, because it supports corporate earnings for exporters. The trade-off is that you're taking on currency risk in exchange for potential upside from improving corporate profitability. For those who prefer to isolate the equity exposure without currency risk, hedging strategies are widely available. But in the current environment, where risk appetite is strong and the yen is under pressure, unhedged exposure to Japanese equities has actually been beneficial for dollar-based investors over the past several months. The key is to be intentional about whether you want that currency exposure or not, and to size your positions accordingly.
That's a really practical point for our audience. Currency decisions matter as much as the equity allocation itself when investing in Japan. As we wrap up today's discussion, let's recap the main themes for global investors watching Japanese markets. What are the key takeaways from today's session?